Hello and welcome. You're watching Business Today Television. I'm Sakshi, Batra, and this is the earnings special edition. We are going to be focusing on TCS earnings, and joining in is the top management of the company to detail for us the earnings highlights and the outlook going forward. I'm now joined by Mr. Samir Seksaria, who is the CFO of TCS. Warm welcome, sir, and thank you so much for taking the time out for this discussion. Congratulations, you've actually managed to post beating estimates kind of numbers on both the top line and the bottom line. However, there has been some dip on the order pipeline as far as the deal wins are concerned. So we're going to be understanding from you what has really worked out and what can be better going forward from here. So first up, on the top line figure, there's a 2.2% uptick. Is this kind of a revenue growth sustainable, sir? And do you see a pickup happening in FY25 as we progress?
Good morning, Sakshi. Glad to be talking on BTV today. So if you see for the last 4 quarters, the revenue growth sequentially has been kind of sluggish. It was between the 0 to 1% range. So happy to have a 2.2% range. What's important is the growth is very broad-based. All geographies have been in the positive. Some of our major markets have been going through pain for considerably long period of time, whereas our emerging markets have been performing quite well during that period. This quarter, we see both emerging markets and major markets contributing, that leading to the 2.2% growth. From a verticals perspective also, the industries, all except one industry, the telcos, the CMI industry, have been positive, and that's a happy sign. Given the volatility which has existed and for a sustained period of time, it's too early to call out that, how it would sustain in the future. But happy to see what we have delivered in Q1.
Samir sir, that's exactly what I was about to ask you, that you've not given out or called out a clear guidance for FY25. So what exactly would you pin that down to? What are the key factors that are restraining you to get a clearer picture of a progress that we could see from you?
Okay, so one, we don't give guidance, and that's probably something that's consistent. But to give you a better color on how things would be, one, what we said in the last quarter, we are still consistent on that, which is that we believe FY25 should work out better than FY24. And I think the deal wins, the TCV or the order book, which has been there, which we have achieved in the last 3-4 quarters, including 8.3 billion in this quarter, has been good. It has been in our comfort band of 7 to 9 billion or above in the past quarters. And the translation from of the new deals has been happening consistent versus we have the issue or the dichotomy in terms of existing projects which were committed in the past, going through its own amount of checks and balances, and sometimes going through pauses or reconsideration for and reprioritization is something which continues, and we expect that to continue. It wasn't. We saw that in Q1, like in the past, and maybe it might continue in the next couple of quarters. I think the customer sentiments or the cautious approach is dependent on, they are also waiting for a trigger, and there are a few events which are lined up, probably with some of the central banks cutting interest rates could be a trigger. The wait and watch on election results in many economies globally could be a trigger. So hopefully that should change some sentiments and evolve into better investment decision, faster investment decision.
Okay, so do tell me, you were talking about the deal wins. Looking at the current scenario, can you do better than FY24 if we ask about FY25? Also, what is the kind of discretionary spend you are seeing? Are clients now budgeting higher for AI vis-a-vis the other segments? And what is the pricing conversation really indicating to you at the current level?
Okay, so see, we had a fabulous FY24 in terms of deal wins. It was around at $43 billion something. And that is an order book or a backlog which is available for us to hop on. As I mentioned to you, we'll be happy with the 7 to 9 billion deal win also. And we started off into that range. Deals which are more importantly, the pipeline which we have is quite healthy, and it is above its normal range which we have been seeing. So there are deals in the pipeline which should convert over its normal course of time. Now, your second question was in terms of the client spends. See, overall client budgets, what all enterprises globally are trying to do is maintain their client budgets, but get more out of what they spend. So they are trying to optimize on, let's say, their maintenance projects or the run projects, and refocus the savings and redivert them into the new. The good part about TCS is TCS can participate in cost optimization programs for them, as well as the reprioritized budgets when they are spent on new. TCS can participate on the transformation programs as well.
Okay, so let's discuss on margins then. Of course, this quarter we've seen an impact of the wage hike, but what could look sustainable to you going forward from here? And are there enough and more levers for you to upgrade the brand that you are working with right now?
Sure. So I think the good part with TCS is we take the biggest headwind for a financial year, which is in terms of wage increments upfront, and that's a 170 basis points impact. And typically we inch up and claw back on our margins as we go into the year in the future quarters. If you looked at FY24, after the first quarter, in each of the next three sequential quarters, we approximately delivered 100 basis points each in each of it. And our Q1 margins at 24.7 are approximately 150 basis points higher than last year, Q1 same time. We are hopeful that we'll be continuing the journey in terms of inching up from 24.7, and the levers which will help us in the short term, it will be pyramid, it would be productivity and utilization, and in the medium term, pricing and growth acceleration should help us assist on the margin front.
Okay, let's now discuss a little bit on the hiring trends, sir. You've added to your headcount. What are the hiring trends we can expect in FY25? Plus, previously there have been some concerns on the delay in the onboarding of freshers. Is that now put on the back burner? Are those issues settled completely? What do you foresee going forward from here in FY25?
See, typically overall hiring is calibrated in terms of how the demand and supply situation plays out. But what we do is the base level hiring in terms of trainees is something which is decided quite in advance, 2 or 3 quarters, and that's where we typically make 40,000 offers, and we stay committed to it. And during the year, as it is scheduled, we'll be onboarding them. I believe we have onboarded 11,000 already in Q1, so we are progressing on that. And the incremental hiring, which is typically in terms of looking at from our NQT platform, the National Qualifier Test platform, or looking at experienced professional, or leveraging on subcontractors, are the levers available to pace up or pace down the hiring. But typically the trainee onboarding remains at par of what we plan.
Understood. Sir, there has been also consistent effort from TCS management to bring back the entire force back to office. You've taken some stern measures also by asking your employees to adhere to the work from office culture. Otherwise, they will be facing reduced variable pay as well. What has been undertaken in this quarter so far, and how will you progress?
I think the return to office, if you look at our campuses have been buzzing, and we see a significant improvement in terms of, so I believe almost 70% and more are working 5 days in office. and this is in line with the employees are enjoying it. It is in line. It is with what customers are also wanting.
Okay, let's come back to a little bit understanding on the geographical performance, the vertical performance from here on, and AI a little bit, sir.
Sure.
First of all, this time around, barring the North American market, rest of them have actually seen a good amount of improvement. By when do you see signs of the North American market really showing us some uptick? Again, is there a lot of macroeconomic uncertainty that will again refrain you from giving a clear picture here? And second of all, which are the verticals that will continue to drive the momentum for you? After a long haul, we've again seen a dip in BFSI. So is this a momentary affair, or will this continue, sir?
So, like you rightly called out, year-on-year basis, North America has a decline of 1.1%, but that is something which we have seen through the past few quarters. Sequentially, North America had an upward, it was positive, almost around the 1% mark. So, that's a positive growth momentum. As you rightly called out, how the macros played out, there's still uncertainty, and we would adopt a wait and watch approach that is in sync with what our clients are also currently reflecting towards. And in terms of similar is, see, BFSI and North America, to an extent, being our largest segments, also go hand in hand. A similar commentary is on BFSI. A lot of large banks in US have been cautiously optimistic in terms of committing to incremental spend and are on a cost optimization spree. But we see some, at least this quarter has seen some positive ones. The verticals which should continue growth momentum would include manufacturing, life sciences, and ERU to an extent. And steadily, as consumer sentiments pick up, the CBG business group also should see momentum picking up.
Okay, so there has been also strong pipeline for you from AI. Your number of engagements have also gone up. So by when do you really see a substantial revenue contribution coming in from AI, which you could now begin to quantify when you give out results, sir?
So I think it's early days. That's where we are giving out the pipeline, and that is on AI plus Gen AI put together. Specifically, if you look at from a Gen AI perspective, the use cases on a large scale implementation in an enterprise is something which is taking its own amount of time, because on a overall using a large language model, you could use a generic LLM, and you and me can get some content moderation and data collation or grammatical thing worked out. But for an enterprise to use it, it has to have enterprise contextual awareness. And that for that, the data to go into the LLM or having an hybrid LLM is something which is taking time. Till we cross that hurdle in terms of financial and legal approvals to have an hybrid LLM, the momentum on pickup on it might be a bit slower. On us reporting incremental numbers from what the pipeline is, once we get comfort in terms of the pickup and consistency of it, is when we'll take a call of reporting further details.
Okay, just one last question on the AI related or Gen AI related hiring per se. Within the entire basket, are you focused on hiring, for specific skill sets, which is the requisite for the Gen AI related projects, or are you building skill sets internally? What exactly is your approach here, sir?
The approach is more in terms of training, and rather than talent acquisition, it is talent upskilling through which we are building these capabilities.
Okay, wonderful. Thank you so much, Samir sir, for speaking to us on Business Today Television. All the very best to you for the upcoming quarters, and many congratulations yet again. The stock has also reacted positively for you after the Q1 earnings too. Many thanks for being with us on this edition.
Thank you, Sakshi. Good day.
Thank you. You too, sir. With that, viewers, we wrap up this very special conversation with top management of TCS right after the earnings have come in. Stock markets have given a thumbs up. TCS stock is now up about 2% in trade. So we'll continue to watch out for that. You've heard from the management the way the outlook shapes up on the top line, bottom line, as well as the profitability, hiring trends as well. All of those factors considering, it looks like it is going to be even though there is some kind of an overhang, there could be better days coming in because there is confidence in the management's voice right there with respect to various segments as well as markets going forward from here. Many thanks for tuning in onto this special edition.